Now, looking at the week's performance, we had the market ending up one day, down the next day, flat the other day. What did you make of what we saw this week?
Well, thank you very much, Mashudu. It's been an interesting week, a series of ups and downs. The week started on the higher positive territory, but towards Tuesday we saw the markets flattening downwards in terms of performance. But as the week was coming to an end, we saw the announcement by Safaricom and even positive results by Equity Bank drive the markets back on its winning streak. So even today, the performance was much better.
Well, looking at Safaricom ending up 11.24%, sitting at 4 shillings and 95 cents, really on the back of those rather strong H1 results.
Yes, indeed. I mean, Safaricom has proven once again that the decisions they made as management to pursue value and not price wars really is paying off in the long run. And those results have driven the markets essentially yesterday and even today. We've seen better performance from the market. And even Safaricom itself, I mean, that's the best performance like in the whole year.
Looking at the second half of the year, can we expect such results to come through for Safaricom?
I'm quite optimistic about that because the December holiday period usually delivers a lot of value to Safaricom in terms of voice calls. And so that will essentially make the business to make more money as opposed or as compared to the first half of the year. So yes, I believe that's attainable.
A stock that has been on somewhat of a rally is East African Portland Cement. We saw it ending up 7% in yesterday's trading session, up almost 10% in today's trading session. What's driving that stock right now? Well,
East African Portland Cement it's like the wrong counter in the right industry because the cement industry is supposed to be doing very well. The real estate is booming in this country, but the management issues has always affected the performance of that stock. As of now, I mean, after they registered a huge loss of I mean, hundreds of millions, I think it was about 800 million. Today, the following day, they announced that they are going to do a swap in terms of the debt that they were holding in form of yen into dollars. That has essentially made them attractive in the market as investors see possible growth in the stock, given that it has real potential given its industry.
Looking at Uchumi supermarkets coming under pressure in today's trading session, down over 2.5% to sit at 19 shillings and 15 cents. What do you make of Uchumi right now?
Well, I would say Uchumi still is the counter to watch. It has performed best in the market to date, and it's really a beautiful growth stock given its perspectives of going into the region. I think right now what is happening is basic profit taking by speculators who were just hoping that Uchumi would deliver value. It has delivered value and they want their money back. So yeah, that's what we are looking at the moment.
Looking at the remittances numbers from Kenyans living abroad, falling back slightly in September, but when you look at year-to-date growth for 2012, it's sitting much better than that what we saw in 2011.
Well, yes, it's bad news, but the way it sits with us today, it's in fact good news because, as you say, last year at the same time, we were talking a different story. You'd realize that as of last year, the European economy was still experiencing the hangovers of the depression, or let me call it the economic recession. Today, what is making that to happen so that there was a drop from August to September in terms of the remittances is the Eurozone crisis, which is eating into the pockets of Kenyans living abroad in Europe. That has essentially affected the remittances and how it is being registered back at home.
And when you look at this money really being sent to help families and for those Kenyans living abroad to somewhat invest in a number of sectors over there in Kenya, when you look at the numbers, which sectors are receiving a lot of attention right now?
Traditionally, most Kenyans living abroad want to invest in real estate. It has been and it is still the case. They believe that at least when you invest in a house, even when you come back home, you can either stay in that house or rent it out for income. A good majority still invests in the stock market, and when they come into the stock market, they would want something that generates income. They want a stock that is rich in dividends, and you'll find that this might cut across in terms of the sectors within the stock market, the industries, but most of them end up being in the commercial center. I mean, in the commercials, given that it's rich in dividends as opposed to many other sectors therein.